Good evening, ladies and gentlemen. A very warm welcome to the Hinduja Global Solutions Limited business update call. From the senior management, we have with us today Mr. Partha Desarkar, Executive Director and Group CEO, Mr. Srinivas Palakodeti, Global CFO, and Mr. Natarajan Radhakrishnan, President and Chief Innovation Officer. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rishabh Shah from Adfactors. Thank you, and over to you, sir.
Thank you, Faizan. Good evening, everyone, and a very warm welcome to business update call of Hinduja Global Solutions Limited. Please note today's call is on Teklink acquisition, and questions should be limited to this. Before we begin the investors call, I would like to mention that some of the statements made in today's conference call may be forward-looking in nature and may involve risks and uncertainties, including those related to the future financials and operating performances, benefits and synergies of the company's strategies, future opportunities and growth of the market company's services and solutions. I would like to further mention that if there is any call drop during the course of conference call, please bear with the management. Thank you, and over to you, Partha sir.
Thank you, and a very good evening to all of you. You have joined us for this investor call today. It's our pleasure to present to you our latest acquisition, Teklink, which we announced a couple of days back. Teklink is in the data and analytics space, a crucial service offering towards pivoting HGS into the technology-enabled digital CX field. You would recall that we divested of the healthcare business in January 2022. Since then, we have acquired quite a few businesses which are different from the businesses that we used to do in the past. We entered Australia through an acquisition for Diversify. Then we acquired the digital media business of Digital that just got over. We have been focusing in our M&A activity on further capability building on the digital customer experience side. And Teklink, with its capabilities in data and insights, is the next logical step in that direction. The new HGS is focused on driving digital-led customer experience services and solutions. And as we go on, we are going to do quite a few of these tuck-in acquisitions, a string of pearls, if I may use that term, to build our capabilities and bolster our presence into a technology-led company. Our goal is to operate in the intersection of strategy, marketing, technology, data, and process management. And that is what we're trying to drive with this particular acquisition. And while I speak, I hope that you are able to access the presentation that is there on our website. So if you are, I would request you to move to the next stage. That kind of draws out our vision of what we are trying to do. Our focus areas are going to be 5 that you see on the top of that slide. These are horizontal capabilities across digital marketing, e-commerce, serving that with technology, data and analytics, and process management. 2 decades of our history have gone in building our process management capabilities. That is the circle that you see on the extreme right of the slide. What Teklink acquisition does is to fill up the gap that we had in our data and analytics practice, which went away when we divested our healthcare business. So we are building it back. Further building our technology capability to bring in elements of digital marketing and e-commerce is what we are planning for the future. The industries that we will target are below that: banking and financial services, the obvious choice; direct-to-consumer retail or e-commerce, we have significant presence in this area; technology, media, telecom, those of you who follow our journey over the last 2.5 decades, this is our mainstay. The new verticals that we have developed over time has been the public sector, which is the mainstay of our UK operation, and the born digital companies that are technology companies who are essentially product companies bringing in new services and depend upon us to provide the customer interaction services. So our work will straddle across technology and strategy and design, technology implementation, managed services, and analytics and insight. And the service areas that we want to build our capabilities are in digital customer engagement, digital experience, cloud and security, analytics and insight, intelligent automation, and contact center transformation. This, you will understand, is quite different from the labor arbitrage business that we traditionally have been in the last 2 decades. We are building on our capabilities of being in this labor arbitrage business, a labor arbitrage-based customer service space, and we are building on top of that. And our partners, as we pivot the company towards a more technology-driven services company, would be the names that you see below, the usual suspects: AWS, Microsoft, Twilio, Sprinkler, Automation Anywhere, Adobe, and UiPath. I will now ask you to move towards the next slide, which tries to explain to you what the Teklink acquisition brings to HGS. We just signed a definitive agreement to acquire 100% for $58.8 million, subject to customary and agreed adjustments. There would be earn-out-based payments in the next 2 years based on financial performance of the company, and the management of the company is expected to stay with us for the years of the earn-out. We've just signed the transaction. We expect to close it in the next 2 months. So there would be some post-signing, pre-closure activities that we will be working on for the next 2 months. I'm very excited by the synergies that we will have as a result of this acquisition, and happy to say that from a position where we almost had no technology revenues, with the acquisition of Teklink, our digital services revenues will end up being close to $100 million of a total revenue base of about $500 billion. So that means about 20% revenues going forward, 20% of our revenues going forward would come from technology services, which is a proof point of our ambition to become a technology services company. With that, I'm going to hand it over to Natarajan, our Chief Innovation Officer, to take you through the rationale and the contours of the deal. Over to you, Natarajan.
Thanks, Partha. Very good evening again. My sincere thanks to all the investors who are attending this call. Partha has already explained our vision of being a digital experience company, technology-led company. In the last 12 months, we have taken a lot of steps towards that. I would also like to recount the journey of digital over the last few years before talking about this particular acquisition. This is slide number 8 in the investors presentation. You would remember we acquired a company by name Element Solutions way back in 2018. It was a $8.5 million revenue base. Over the last 4 years, we have managed to grow this technology business by a CAGR of 30% year on year. And we are not a broad spectrum IT services company. And that is increasingly becoming commoditized and price competitive. We have chosen to focus on what I call 3 years in a cloud first model. That is, automation is the first A, analytics is the second A, and artificial intelligence, which covers.
Rajan, the audio is breaking from your line, sir.
Okay. Is it better now?
Yes, sir. Thank you.
Okay. So I was saying, a business which is differentiated by solution accelerators and products. By products, I mean implementation of commercially off-the-shelf products. We do have rich domain experience in select industry verticals. Partha already mentioned 6 industry verticals. We do have technology, services, and solution presence in these verticals. And we have very deep relationships. Many of our clients have continued over the last 15 years. If I include clients of an earlier acquisition, they've all remained with us. In fact, we received a very, very high customer satisfaction scores in the recently concluded survey. And partnership with the names Partha already mentioned, Microsoft, Adobe, AWS, Twilio, and Automation Anywhere. And globally, we have about 750 technology professionals. Most of them are based out of US and India. The 6 practices Partha has already covered, starting from digital experience, which includes websites and e-commerce, digital engagement, where we do digital marketing, online reputation management kind of services, cloud migration, managed services, cyber security, and then data and analytics. Our objectives are data modeling, analytical reports as a service, descriptive, predictive, prescriptive, and cognitive analytics. All of that is under data and analytics. And we do a lot of process automation using tools, very tool agnostic. We use Automation Anywhere, UiPath, Power Apps, all of that. And finally, given our experience in the contact center world, we also have a very strong contact center transformation offering. As you know, contact centers are transforming from a physical model to a phygital model, a combination of agents plus lots and lots of technology. So these are our 6 offerings, and the revenue growth has been very, very robust. Given this background, I have moved on to slide number 9. As Partha mentioned, we announced this acquisition of Teklink a couple of days back. Teklink was founded by Mr. Pankaj Gupta. Pankaj has nearly 33 years experience in the IT services and products space. He's worked in marquee companies like TCS and SAP before setting up Teklink way back in 2003. Teklink focuses on implementing financial planning products, data science, and analytics services offerings. It's headquartered in Warrenville. It's a suburb of Chicago in Illinois, US. They have a small presence in Europe, and India delivery centers are in Hyderabad and Indore, primarily Hyderabad, a small number of FTEs in Indore. They have expertise in multiple industry domains, strongest being fast-moving consumer goods, all the consumer retail, confectionery, food companies. They have a very strong presence. They have over 55 clients. In fact, acquiring new, they have strong suit. And many of the existing clients have been with them for 10 plus years. 275 employees, almost all of them focused on analytics and planning, except the support services teams. And they also have, Teklink also has strong partnerships, SAP, Anaplan, Google Cloud, These are mostly non-overlapping with what HGS Digital has today. And they continue to receive high customer satisfaction score and well regarded by analysts. In fact, the 2022 Gartner Peer Insights rates them 4.6 out of 5 and also carries a 97% would recommend score from the clients. If you look at Teklink service offerings, it's a broad swath of offerings covering the entire data science and analytics space, right from data warehousing, data visualization using tools, big data, advanced analytics, including predictive and cognitive analytics, implementation of enterprise planning products, trade promotion management, SAP TPM implementations, consulting advisory services, and application management services around business intelligence. It's a broad collection of offerings covering the entire analytics space. Let me move on to slide number 10, some color in terms of their financial performance. The revenues, calendar year 2020, Teklink had global revenues of 20.1 million. And in 2021, it increased to 21.8 million, despite COVID and somewhat depressed market conditions. And in the current calendar year, for the first 9 months, their revenues are approximately 22.5 million. This is a significant growth over both 2020 and 2021, and despite the market conditions. You can annualize the revenues and make some estimates on full year revenues. And the EBITDA is fairly good. It's in the mid to high teens. And the overall headcount is about 275 people, 210 people in India, and the balance 65 spread across US and very few FTEs in Europe. On the right-hand side, we have revenues by origination. 91% of the revenues are from US-based clients, and the balance 7% from Europe and 2 percentage points from India. These are mostly global clients. So you may want to ask why this acquisition and what is the rationale for this acquisition. That is covered in slide number 11. As Partha mentioned, with the sale of healthcare business, our data and analytics practice kind of scaled down significantly. And we need this. This is a very important cog in our overall scheme of things. I mentioned 6 different service offerings. These are not really standalone. These days, most of the deals are multi-tower, cross-tower kind of deals. Automation plus digital customer engagement, analytics plus customer experience. So even we have to grow our data and analytics practice, plus even for our other offerings, data and analytics is absolutely the capability is essential. So this makes perfect sense to augment our capabilities in this space. And we are very strong in financials and TNT and bond digital companies. And Teklink has very strong presence in the FMCG space, especially consumer, foods, retail, confectionery, and also pharmaceutical space. These are additive over and above where we have strength. And similarly, their platform partnerships, particularly SAP and Anaplan, are of tremendous value to us. And it brings on board 275 data and analytics professionals to our company with expertise in consulting as well. And we see a tremendous opportunity to cross-sell and upsell our offerings across each other. We expect to take the data and analytics offering and sell it to HGS Digital clients. And similarly, take our digital customer experience, digital customer engagement, cloud security, contact center transformation offerings to Teklink customers. We expect a significant synergy through this cross-sell and upsell. And finally, culturally, it's a very, very strong alignment. HGS Digital has a very entrepreneurial culture and a client-focused culture. We were very happy to note that Teklink had a very similar cultural approach, and that indicates a strong cultural alignment. So all in all, it's a perfect synergy. It's almost like a perfect acquisition candidate for us. So that was the rationale behind acquiring Teklink. I'll probably stop there, and we can take any questions on this particular acquisition.
Thank you very much.
Thank you.
We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and one. First question is from the line of Jay Shah from M Square Tech. Please go ahead.
Thank you, sir, and congratulations for this acquisition. So we have 3-4 questions in line. We just wanted to understand the rationale behind the valuation that has been considered while acquiring this Teklink. So I understand it's around 2 times the annual revenues. First is that. Second is, how many years do you expect these synergies to materialize on the cost and revenue front? And third is, what kind of percentage share you see in the existing contribution from the U.S. market post this acquisition? I believe the HGS current share is around 30% if we look at the delivery by location share. So how it is going to change post this acquisition? 3 questions.
Anna, you want to take that question?
Yeah. Hi, can you hear me?
Yes, sir.
Okay. So let me start on the revenue by origination. If you see what, as of Q2, we had about 31% of our revenues coming in from US, right? And that's on a base of about $138 million. Now, if you go back and if you look at the slide which we have presented, so it's going to be about 91% of Teklink revenues, and just to annualize, that's going to come to about 90%, right? So about 27 million additional will come from Teklink, which is all US origination. And so 31% of 138 and another 27 million. So that's roughly what will come from a US origination perspective. Now, as we have mentioned, from a delivery perspective, in this kind of business, it's a combination of what is done in India and also what is being done in US. So it's very difficult to put a number in terms of the impact on the revenue by delivery, given it is entrenched and this is different from the normal BPM work which we do, right? Or part of the BPM work, right? So it's a little difficult to look at the way that way. In terms of synergies, both we are focused primarily on on revenue synergies. Of course, there will be opportunities on the cost side as well. So we'll have about 210 people coming in as GS employees in India post the acquisition, additional employees. And obviously, there will be scope for synergies on the cost side. And that should happen fairly quickly post-closing. We are very excited about the cross-sell opportunities which come up, what Matt talked about. Being able to sell our services primarily from digital as well as the BPM services to Teklink customers, and also offer the analytics services which Teklink specializes in to our existing HGS customers. Again, we think those synergies would start coming in fairly quickly once the transaction is complete, and we expect about 90 odd days for the integration to get completed. In terms of valuation, as we said, of course, this is negotiated, and as you correctly said, it comes close to 2 times revenue. And looking at the nature of business, the size, we believe this is a fair valuation. And as we've also mentioned, there will be additional earnouts, but that is based on the future financial performance.
Noted, sir. Just one follow-on question, sir. There is a separate cost which is mentioned around 2.6 crore for the business transfer agreement. So is it part of this 58.5 million?
Yeah, it is part of the 58.8 million.
Okay. Thank you, sir. I'll join the queue, sir. Thank you.
Thank you. Thank you for your question.
Thank you. The next question is from the line of Jyoti Singh from Arihant Capital Markets. Please go ahead.
Yeah, thank you for the opportunity. Sir, my question is on the acquisition side. What's your expectation on the margin front? How we are, what's your view on the margin front going forward, and how we are seeing how much this company will be benefit for the Hinduja Global, as we were doing pretty decent on the healthcare business side, which we already sold.
Well, you want to take this or shall I?
No, go ahead. I mean, you already said this company will have EBITDA margins in mid to high teens, and so that's what we expect going forward. Obviously, we'll try to improve through cost and revenue synergies, but this margins we believe will be sustainable as we go forward. Matt, please feel free to add.
This is comparable to our existing EBITDA margins on the technology side of HGS. Partha mentioned that this 20% of our overall revenues will be from technology business. The existing as well as Teklink business are in the mid to high teens in terms of EBITDA. So it is very comparable. It is not out of the whack.
Okay. And sir, what are the geography front? I mean, which geography we are targeting through Teklink?
Teklink is primarily a US focused company. They do have some European clients, particularly UK, Spain, and Switzerland. And the India business is all global clients. They are not really India focused. So I would say 90% plus are US clients.
Okay. So, sir, as they have a major revenue from the US, approx 91%, so is there, due to current scenario, they are facing any downside about the macroeconomic situation?
Interestingly, the analytics side of business, analytics part of the industry, IT industry, seems to have done very well. The demand continues to be very strong in this space. Teklink's existing customer spend of existing clients seems to have gone up in the last 9 months. And they've also managed to acquire 10 plus new clients in the past 9 months. That indicates a robust demand scenario. And even in our existing digital business, wherever we go around, we have not seen any kind of slowdown, particularly on some of these offerings. So I would say these are segments where the demand has managed to kind of counter the recession.
Okay, thank you, sir.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Hina Parekh from Finteri Securities. Please go ahead.
Hello. So since Teklink services are present across industries, which industry contributes the most its top line?
Well, let me take this one. FMCG is the most dominant industry segment. That includes all the consumer companies, food companies, confectionery companies, plus also retail and pharma. That is outside FMCG. These three, I would say, are the top industry segments.
Okay. And is it possible to share a segmental breakup of each industry for Teklink?
Yeah, we will come back and do it formally.
Okay. Thank you.
Thank you. The next question is from the line of Nayan Gala from Etika Wealth. Please go ahead.
Good evening, sir. So I was just going through the release which was uploaded on the stock exchange, and it says that we are planning to we have signed one more letter of intent to acquire Ukinova. So if you can just help us understand the definitive time frame to sign an agreement with that.
Let me take this. As we said, we would like this session to be focused primarily on Teklink, because the other one is at the very early stages. It's hard to right now. Difficult to specify timelines. So I would request the questions to be limited to Teklink.
Okay, sir. So thank you. That's all from my side.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Partha Desarkar for closing comments.
Thank you very much, everyone, for being with us for this call to explain what is the plan going forward with Teklink. I can assure you there are many that we are lining up as we speak, and we'll have many more opportunities to interact as we build our technology capabilities for AGS 2.0. Thank you very much.
Thank you.
Thank you, everyone.
Thank you.
Thank you, sir. Ladies and gentlemen, on behalf of Hinduja Global Solutions Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.